It's the same emotion all traders will feel, but stage one is not acting on it. So if you can future pace yourself in that moment and almost say, I cannot afford to break my rules, because if I keep breaking my rules, I'm never know where I'm going to be, and I'm never going to actually have a strategy that I can trust. And understanding that in that moment, if I feel that way, that's the same feeling that 80% of traders out there will act on. And ask yourself a simple question. Do I want to be the 80% or do I want to be the 20%?
What's up, everyone? Hope you're doing fine, and welcome back to the podcast once again. Today I'm sitting down with a good trader I really love to talk to every single time, Ali Crooks. He's someone who manages a fund, trades full-time, someone who really knows about the mindset of what it takes to become a good trader as well. Been coaching traders for many, many years, but also trading himself for many, many years. And in this interview, we talk a lot about journaling and really about kind of keeping track of data. Data is one of the things that really help you to stay consistent and maintain the results, or if you actually have bad results, to bring them back on the right track. I wish we could have made this into a behind the scenes of how actually Ali journals his trade and what kind of things you look at. We cover a lot of good stuff for sure, but if you want to see how someone does it in details and what it actually looks like in the back end, I'll leave below a free training we've done where Michael on our team goes through how he journals his trade, what things he looks at, and how he really keeps this journaling in place for good momentum and to keep his good results on the right track. That will be linked in the description. You can check it out. But there's a lot of good stuff in this interview, so keep watching this, keep taking some notes, and we'll dive right into the interview. Ali, welcome back on the podcast. Good to have you here again, and look forward to talk trading with you again.
Oh, it's good to be back.
Let's begin with kind of what's been going on since we last spoke. I know you've been featured in our book, Prop Trading Secrets. We talked last time, I think, about you kind of scaling up the fund and going into a different level. Tell me with kind of what's in your mind these days.
That's a really good. Yeah, the book's been great. I've had people get in touch with me saying how much they enjoyed it. So thank you for having me be part of that. And it's I think it's really important at the moment because the prop firm space is becoming more and more popular, and I'm seeing a lot of students coming to me, and I'll get to that in a minute. But in terms of what I've been up to, yeah, I'm doing a big revamp of what's going on at Trader Support Club. So we are redoing all of our training programs. We are redoing everything that we've got going on because I want to dedicate a little bit more time to working with people one-on-one and to leveraging up what I'm doing with my fund. So the fund has been good. Last year wasn't the best year's performance that I've had. It was probably the lowest compared to all of the other years that I've run, but it's going to happen. Sometimes, you're not going to have every single year where you're flying along. But for me, that is still the long-term focus will be to build that over time, and probably within about 3 to 5 years, I'll be taking a back seat from the education space and focusing much more on that. So yeah, over the next 5 years, I still will be coaching and training, but that will in 5 years' time be really just when I'm working with people one-on-one. Going forward, it's going to be all about the fund as I roll into my 50s and get that a little bit older. So yeah, that will be where I focus.
Interesting. What happens when you have not a bad year, but a year that's a bit less than expected? Do you have any issues with your mindset? Do you feel like you have to outperform the next year, or what does that tell you?
That's a great question. I don't think any trader that has a year that is subpar or sub their average doesn't have that feeling inside them. I think that feeling is natural, and it's something that I've talked to my students about. Is that especially if you're more of a slightly greed-based trader, that I know I am. That's my original starting point, which was, if I'm down or I'm having a quiet period or things aren't going exactly how I want, I would always want to chase the trade. So that feeling doesn't go away. But as I say to anyone listening to this podcast, is that it's the first stage is whether you act on those feelings. So it's not. There's often this illusion that traders that have been doing it for 20 years, they're completely emotionless. No, what it is they've just got their emotions very well regulated. And what that means is that they're not reacting and they're not breaking their rules. So of course there was a desire this year to, you want to push back up and you want to maintain the average, but you have to trust in the system and the strategy and the process. And so far, so good this year. So for me, it's all about just being patient, even if there is a want and desire there to push on. It certainly isn't about doing anything different. It isn't about leveraging up, or it isn't about chasing other trades or changing the strategies, because I know my system and I know that there can be periods, there can be 4 months, even 6 months as a swing trader where things aren't as, that things are quiet, and there is the odd period of time that isn't as good. So from a mindset point of view, yes, there is a little bit of you that wants to push on and get back to the average as soon as you can. But it's the experience and the knowing that you've just got to trust in your process.
What's the review process like? Because you could have a good year in terms of profit, but be doing a bunch of stuff wrong. You could be like taking bad trades and stuff. How do you know when your results are good enough and you've done the right thing also at the same time?
Yeah, that's a great question. I think I say this to all my students. It's all about being your own performance manager. So it's judging every trade on that trade's merits, not whether the trade is a winner or a loser. Yeah, you could easily sit here and say, yeah, the simple thing is I could say, yeah, I'm back above my average. I'm back above the watermark that I wanted to hit, and all I've done is just double up on my trades and got lucky. But the risk then is that if you then go into a drawdown period, it's gonna go the other way. So for me, it's all about data and journaling, and making sure that not just you're recording the trades that you've taken and the result, you're actually journaling how you're performing. You can have a really simple process where you just classify every single trade, and it requires honesty. But I just say to my guys, just simply classify the trade. Was the trade a good trade? Did you make a mistake? So a mistake just simply being after the event, you realize you did something wrong. Or was it a conscious rule break? And a conscious rule break could be risking more than you know you should. So going outside of your risk parameters. A conscious rule break can even be running a trade for longer past your intended target. I say to all my traders, if you've got a planned target and you get to that target and you decide, I'm going to run it for longer, and that trade does another 3 or 4 R, it looks good on the P&L, but actually was that just a quick decision you made and you got lucky because that market decided to push the other way? And in that moment, you have to see the opposite. And the opposite in that moment is you could have made that decision not to get out because you wanted to run the trade for longer and the trade dipped the other way. So in that moment, you've only got your rules, you've only got your system. So it's all about journaling and monitoring that. And the problem is a lot of traders have good intentions, but they'll get 2, 3, 4, 5 weeks behind. They're behind on their data, and they won't be able to recall what they were thinking and doing back at that point. They won't be able to go, that was the reason why I made that decision. A lot of traders will sweep it under the carpet. So for me, it's practicing what I preach, and during any period, whether it's a quiet period, an underperforming period, or a good period, it's all about keeping on top of my data. I don't journal to the same extent that I used to when I first started out, because I don't have the same problems and challenges that I had back then. So I'm not having to worry about discipline because my discipline stays strong. But if I see myself just starting to shift in my mindset, I will log that and note it, because awareness is the first thing. I think I said this to you on a previous podcast when I first launched the fund, because I'm reporting my results every single month. That was a shift in mindset for me, because I got used to just doing my thing on my own account, and the end of the month would come. If I was up at the end of the month, great. If I was down, so be it. But when you had to report your figures in, there was a little bit of you that wanted to obviously report on a winning basis per month. And as a trader, that isn't always going to be the case, especially if you're swing trading like I am. So yeah, for me, it's all about keeping on top of the data and journaling anything that you are noticing. So a good thing a trader can do is just simply have an area on a spreadsheet, or if they're day trading, have a pad of paper and just write down words and phrases and things that come up. So if they find themselves losing concentration, log that down. If they find themselves getting overly excited at the thought of the trade hitting target, write that down. And just at the end of the day, at the end of the week, go through and look for a thread in what is happening. And if they can see a pattern in the way that they are thinking and the feelings they've got, they may be able to correlate that to the actions that they're taking and whether or not those actions are serving them.
I'd be curious to hear more about that process of journaling for especially like a newer trader or someone who's struggling and trying to turn things around. And what I'm curious about is, do you track trades right after you got out of them, or do you kind of leave a waiting period there to kind of calm down and collect yourself and then you track it, or how does that work out?
That's a great question. And this is something that you could argue it's a little bit personal depending on the trader. Certainly for a day trader, if they've got 5 positions for the day, the last thing that trader really wants to be doing is logging that trade down, in their spreadsheet as they're going, because and trying to make sense of what they thought, because one could miss the next trade that's coming along, because it could be, it could be 5 minutes, 10 minutes away. And also that self-evaluation, it's easy in that moment to start getting self-critical. And then that changes your mindset potentially for the next trade. So for me, it's all about, if they're sitting there and day trading, it's really easy. Just a piece of paper, and you just have pre, during, and post trade. So all you have is 3 columns, and in the pre-trade, you just jot, even shorthand, any emotions that you're feeling, anything that's repeatedly you're hearing in your head, any specific feeling. And then during the trade, you do the same thing. You write that down. And then post-trade, you might go annoyed, frustrated, or happy, or neutral. And then all that happens is you take that piece of paper, put it down, and then you get a new piece of paper for the next trade. So all you're doing is gathering data, but you won't do anything with that data until the end of the day, because the last thing you want to do is try and self-evaluate when you're trying to trade. So as a day trader, the earliest point you would do any form of valuation of that data would be the end of the day. And really that's just to collate it, look at it, and see if there's any threads. But the majority of day traders that I work with, they will focus more on the end of the week. So they will collate their trades. They'll take a day, especially at the weekend, because they're not distracted by the markets being open, and they can collate their data. They can look at the patterns in their pre, during, and post journaling process. Because for some traders, it's during the trade that messes them up. It's once they've got the risk on the trade, that's when the good intentions start to go. But for some traders, it's more fear orientated, and it's pre-trade. It's what goes on before they actually place the trade. And you've been there, where you've been umming and ahhing about a trade, and sometimes when you finally place the trade, you actually feel a sense of relief, because finally you've made a decision. But for other traders, they'll happily get in, and then once they're in the trade, they're thinking, what have I done? I shouldn't have done it. Then they miraculously see a level that they didn't see before they entered the trade, and that starts playing on their mind. So if they can identify which area, pre, during, or post, tends to be the issue. And a lot of traders don't spend enough time logging what happened, what they feel after the trade. And again, it's got to be quick if you're day trading, because the next trade could be coming along. But I always say, if you've got too many emotions, too many frustrations, it can be positive or negative. So it could be frustration, as I've said, or it could be overly excited or overly happy about the winning trade. The risk is you bring that emotion with you into the potential next trade. So using that simple process is really useful. And then you can just have 3 columns on your spreadsheet. And we have a spreadsheet that has that you input all of this data for the trades, but the last 3 columns is where you transfer those notes for pre, during, and post. So you can get a vibe. Now, if you're a swing trader, I would say you can do a review at the end of the week, but it's obviously dependent on your level of trade frequency. And it might be better to do that at the end of the month, because you've got a bit more data and a bit more time to play with. But one of the big things I see as a differential is often with the day trader, it's the intensity, because the trade frequency is much higher. So they've got to combat and cope with that intensity, especially in the early days. But with a swing trader, sometimes it's more boredom, that they might be in a trade for 2 weeks and there's nothing to do, and they get frustrated during the trade, but their frustration isn't necessarily a fear-based frustration. It's more a boredom frustration, because they're in trades for longer. So it's looking for the threads and looking for where that trader is having an issue. Now, some traders will look and go, flipping heck, I'm emotional at the start, I'm emotional during, and I'm emotional after. Okay, well, we don't want you to try and work on everything, because if you've got too many things you're trying to work on, you're gonna have too much to do, and you won't be successful. So you need to pick one of the 3 that you think would probably be the most effective. It's a little bit like the 80-20 rule. You say, right, okay, if I focus on working on my emotions and my discipline during the trade, that's going to have the biggest impact out of all 3, and that will have a knock-on effect going into post-trade and what happens on the next trade as it comes around.
Just want to take here a quick moment. I didn't really break down how to journal really well in this. I want to kind of give you a way to see it behind the scenes. So I'll leave a link in the description, a full walkthrough that Michael Tama on our team did with his trading journal, how he kind of keep tracks of things and what data he's tracking, and also how to see really what he looks at when he's journaling. Hopefully I can give you a more visual look if you want to see how it's done in real and kind of have it behind the scene with an actual screen share. But I thought I've got advice in this interview coming up, so we'll jump right back into it. I'm sure you hear people who they know what their issue is. They know they're not disciplined. They don't follow their plan, and then they just can't get themselves to do it on the next trade. How do you start to work on that?
That's another great question. For me, I think the first thing is awareness. So what I'm saying about the journaling, usually what can happen is the trader, if they're not logging it down in black and white, they'll play tricks on themselves. They go, yeah, I know I've got an issue with discipline, but they'll try and be positive. And then as soon as a trade is finished, if they haven't got discipline and they've broken their rules and they've done X, Y, and Z wrong, they'll often just sweep it under the carpet and they'll say something like, next time it's going to be different. And they say, right, I'm starting afresh now. It's going to be different this month, or it's going to be different this week, or tomorrow I'm going to do it properly. But the problem is that trade is then forgotten. And the problem there is they don't realize the frequency of it because they're trying to remain positive and they're trying to stay focused, and they're blocking out what has happened. And whilst you don't necessarily want to be thinking about the last trade going into the next one, if it's there in black and white, sometimes the shock of how often they're breaking their rules. So I'll get somebody message me or working with somebody early days, and they say, I'm really struggling with discipline. And I say, okay, out of your last 100 trades, how many of those trades did you stick to your rules on? And they don't know. Nobody knows. They know they're struggling with discipline, but they can't actually quantify it. And when they actually sit down and go, blimey, it was 65 out of my last 100 trades where I broke my rules. Sometimes just the shock of knowing the number and seeing how much it is enough. It's enough awareness for them to start doing something about it. I think the second thing is accountability. So having an accountability mechanism with a coach, with a trading buddy, or it can even be with themselves at the end of the week. It's amazing how many traders I've worked with that have said, just by knowing that I've got to submit my results to you at the end of the month or the end of the week helps me stay on track. So accountability is another one. So awareness, accountability. And then I think future pacing. So self-talk's very important. So in that moment where you want to jump out of your trade, that moment where you're 3 points away from your target and you think, right, I'm going to jump out. And then it pulls away and you start worrying. You think, I want to get out. It's understanding in that moment that the emotion that you're feeling is the same emotion that I will feel. It's the same emotion you will feel, the same emotion all traders will feel. But stage one is not acting on it. So if you can future pace yourself in that moment and almost say, I cannot afford to break my rules, because if I keep breaking my rules, I'm never know where I'm going to be, and I'm never going to actually have a strategy that I can trust. And understanding that in that moment, if I feel that way, that's the same feeling that 80% of traders out there will act on. And ask yourself a simple question. Do I want to be the 80% or do I want to be the 20%? Whereas I think what traders do is they try and not feel the emotion of fear or not feel the emotion or frustration. But you've got to accept that it's there. And as soon as you accept it, it reduces. And then understand that if you act on it, you're just behaving like the herd. You're not actually doing what the 20% of successful traders do. And also, lastly, I think take it one trade at a time. A lot of traders are forecasting too far ahead and hoping for a winning month, and they're up by the middle of the month, and then they start imagining that they're going to get to the end of the month and be profitable. And the problem there is you're not thinking about where you are right now. Lots of sports people, lots of athletes talk about as soon as they start thinking about winning the championship. So they're one set away in tennis from winning Wimbledon. As soon as they start thinking about winning Wimbledon, that's when the other player comes back, because they're not in the present. So it's doing things to be in the present as well. And that can be difficult if you're swing trading, because you've got to hold a trade for 2 or 3 weeks. You're not always going to be in the moment and in the present. Your mind's more likely to drift. So it's just catching and remembering that when you feel that way, it's okay. But if you act on it, you're doing what everybody else is doing.
Do you think how someone sees themselves affect the results? Like someone who sees them, they've been losing money for a while, they see themselves as a losing trader. How does that affect the results in the long term? Are they able to flip things around easily, or because they see themselves as losing, they keep losing over time?
I think that's a good question. It's dependent on the person. I certainly, if I think back to drawdown periods I've had, for me, actually, it's usually early on. And what I realize is that on some level, I think traders get attached to the fact that they're having a winning run. So when it stops, or they start to give profit back, they start to think, oh, because they've actually linked their identity to being a winning trader. So I think the problem is linking their identity. Now, if you're a trader listening to this and you've never seen the light of day, you've gone into profit and then you've spent a large chunk of time in drawdown. I do think it's hard when you start out because there's two things going on. Firstly, a lot of the time that's original capital that you've lost. So you can't even justify it in your mind and say, well, I'm 20% up for the last 3 months. So this month while I'm down 5%. It's still only profit. It's often their original money that's losing. But yes, identity is important. If that trader is hearing themselves saying that or can associate a feeling to that, that's what they should be logging down. Because one of the things to always remember is the market doesn't see you that way. The only person that is seeing you that way is you. So the next trade has nothing to do with the last trade. The next trade's result has nothing to do with the previous trade's result. And the more that a trader can use that as a mantra, so mantras can be quite good. It's no good standing in front of the mirror and saying, I'm an amazing trader, if all you've done is lose, because your subconscious and your mind will go, no, you're not, you idiot. You're not. But if you try and fight that too much, you're just going to get more stressed. But if you can accept that I've had losing trades, doesn't necessarily mean I'm a losing trader. And this is where data is so important, because if the trader can say hand on heart that they're sticking to their rules, then they're doing everything that a successful trader should do in terms of execution. Then it's a case of they might just be trading a strategy that's going through a bad period, or the strategy is not a good strategy and they need to change it. But they'll only ever know that if they're sticking to their rules. So if they can have these markers, which is I'm a process-oriented trader, I stick to my rules, mantras like that are more realistic rather than something saying I'm a winning trader, if they feel inside that they're not. But they have to work on separating the two. And it's easier said than done. And this is why going through a drawdown, my guys I work with think I'm weird, Etienne. They see me, they send me their results and they're like, I had 10% last month and I'm break even this month. And it's almost like they expect me to be upset. And I look and check, as long as their performance is good, I'm actually excited because I want to see them go through those inevitable periods. So the sooner they can do it, and if they can stick to their rules, then what they're doing is learning that that's all I need to do. So for me, yes, identity plays a huge role, but you can subtly shift your identity to a trader who executes flawlessly. One of the guys that works with me and helps with some of my students, he says, your goal is flawless execution. And I love that phrase because because that's all you've got. You haven't got the future. You don't know what's going to happen next month. Yes, you have a strategy that's got an edge and has worked over a period of time, but all you can do to honor that strategy is flawlessly execute. And if you can have the identity of somebody who flawlessly executes, it doesn't mean you won't feel like a losing trader because the previous results show that. But if you can also have an identity of somebody who flawlessly executes, over time, that identity will take over, assuming that you've got the right strategy in play as well, and that strategy will eventually show profitability.
It's interesting how a lot of people are trained to avoid drawdowns, but drawdowns actually teach you a lot about yourself and how to recover as a trader too.
I think a lot of it is down to the fact that you've got to face something. It's the same with data. It's almost like two phases. So I'll get a trader who's never recorded a trade in his life. And it's like, right, first goal, get them just to record their trades. And even if it's manually, because a lot of these systems out there, you can download your results from the broker and it punts it into a spreadsheet type thing. And that's great. But there's also something really powerful about committing to a trade, not just on your broker, but committing to it on a spreadsheet and then following it through. Now, the second phase is journaling, because with journaling, you've got to understand yourself. And a lot of the time we're constantly talking to ourselves in our head. Like you mentioned earlier, we can be thinking and worrying, I'm not disciplined, my identity, I'm a losing trader, I can't just get it right. Why does it not work for me? Why does it work for everybody else? Well, it doesn't work for everybody else. It only works for a certain percentage. But all of these things are being said. But once they're out, if you can start to see them, you can start to do something about it. And that's hard work. And it's even harder if you're trying to focus on trading, literally if you're day trading or, scalping. But you shouldn't really be scalping until you've got some level of discipline. But day trading wise, it's hard to do all of that. And that's the hard work. I think A lot of traders, especially in their first 6 months to a year, they think the hard work is learning the tools, the techniques, the strategies. Once you do that, the hard work is being able to execute them as market conditions can change, and then knowing yourself. So that, and whether that's you go through a period where everything's fine because you're trading with a $5,000 account, and then you get prop firm qualified, and suddenly you're over here with a different discipline. You've got your account here and you've got that account there. Or maybe you've been successful a couple of years and you up the amount you trade with. Or maybe you do what I've done and then suddenly you're trading somebody else's money. So it's not that your mindset and your ability to have a winning mindset is fixed. It could be you start a new discipline and that makes you more nervous or makes you more anxious. So there's so many factors at play. And I think if the trader can accept that they might see the result of somebody who's trading successfully and consistently, and they think that they're bulletproof, but it's the work that they've done to get there. And I think that's something that isn't talked about enough. And it's not just the fact that they're good at seeing the setup and placing the trade. It's the fact for a lot of them, they've had that moment where they're like, I need to move from this frustration, this anger, this annoyance, this inconsistency. And actually I've got to turn it in towards me and look at what I'm doing rather than it being about the strategy or the system. Assuming the system they've got is proven and it works, invariably it's about them. So yeah, it's one of those things. I think regardless of technology, there will always be a percentage of traders out there that don't want to do that work. And for some traders, they don't need to. They're highly disciplined and they don't need to do it to a huge extent. But the majority of people who struggle with consistency, data and journaling is going to make a huge difference.
Have you seen people who journal everything when they don't have good results, and then when they have good results, they stop everything and they kind of keep it going without journaling after?
Yes. Funnily enough, this little coaching framework that I've put together for different levels. And I talk about the first 3 levels of a trader. And it's not until you get to level 4 where you start to see consistency. There's a lag time. Often you can start doing things right at level 3, but it takes a while for the consistency to show. And one of the things I talk about for level 5 traders and even level 6 traders is be careful. It literally says in the summary for them, it says, be careful of stopping doing the things that got you here. And I've seen that. It's like, oh, now the problem is solved. Now I'm good. Exactly what you said. And that's when those good habits stop. And then suddenly something happens, and that trader almost is scrambling around mentally because they've taken their foot off the gas and thought, well, everything's sorted now. And that links back to what I was saying a minute ago about this. The journey doesn't really end, whether it's adding more money to your account or trying a new something. If you see it that way, that also helps you stay more humble. And by staying more humble, you're more likely to do the things that keep doing the things that got you there. So yeah, that is one that I really push home, is that just because things are going well, your results are good. And also the other thing a lot of traders can forget is they might have not had a bad period for a year, even 2 years, just that, they've been on a roll and they've almost forgotten how the coping mechanism that they use to get them through that. So when it happens, maybe it's only a short period, a couple of months or even less as a day trader, but they're like, oh God, I haven't experienced this for a while. And actually that's why they need to be able to continue to journal and collect their data so that they've got a reference point and they keep those good habits up. Yeah.
I mean, you currently trade for fun, you have good results. What's the next goal that comes to your mind? Is it actually a goal you aim for, or is it just kind of maintaining that and kind of just keeping the same thing every day?
That's yeah. I mean, in terms of the fund, what I want to do is I just want to steadily take it bigger. I'm not planning to suddenly go from the amount under management now and 10x it in 6 months. I just want to steadily build it up. And I think in a way, having a year that was subpar and below the average has actually been good, because it's made me go, yep, I just need to to really stay on my watch and make sure I'm doing everything right. So yeah, that I think that the idea with that is to build it up and push it into the 8-figure, maybe even 9-figure. But for me, there is an element of making sure that I'm comfortable with what I do, because that's also another thing. I've seen this. If you can link that to traders who trade with too much money too soon or risk too much per trade. risking too much per trade obviously has bigger consequences than just trading with the same percentage risk but higher amounts of money, because you can obviously blow up more quickly. But putting any undue pressure on you as a trader, you've got to find the right balance between pushing yourself, and that's different for every trader, as well as being in a place of comfort. So yeah, for me, that will be the long-term goal. And as I said earlier, for me, the education in probably 5 years' time and working with traders will step back a little bit. So I'll put a bit more focus into that. But with the fund, the great thing about it is whether I'm managing 20 million or whether I'm managing 2 million, in terms of the actual time that's involved, it's not additional time, because it's the same trades, it's the same setups. So that's the nice thing. The leverage is there, and that's no different for a trader who's goes from trading with $1,000 to $100,000. That it's the same set of trades. So, but it will probably bring more pressure, so that there will be an issue there. And also, I've got to take the time to go out and source those funds and make sure it's the funds of the people I want to work with. And there'll be lots of things going on there. But yeah, that will be the long-term play as I go sort of into my 50s, and then that will be what I keep doing. But short-term, yeah, still pushing on with the education, because there's a lot of people that need help.
Awesome. Tell me what people can find you and connect with you after this podcast to learn from you and work with you.
Yeah, just head to tradersupportclub.com. We've opened up a free community now. So we've got a whole load of free material. We've got a new app as well. So we've got an app that you can watch all the material that we do. And I've got this new 6-figure trading roadmap, which is to help traders identify what level they're at and the strengths and weaknesses and the issues and constraints they have at those levels, but very specifically set of action points to help them move forward. So yeah, head to tradersupportclub.com. You can find me on YouTube, Ali Crooks. Find me on TikTok, Ali Crooks. I think I'm on there, Ali, and then Instagram, Ali Crooks Official. But yeah, just Google me. You'll find the website, or you'll find a social media point. And please follow, and it'll be good to see.
Awesome. I'll put a link below. You're on social media as well, so we'll put those links. People can reach out to you and find you that way, and hopefully they can learn from you. I know you put some good stuff out there, so I really appreciate that. As always, I hope you like this interview. Comment below with your favorite advice. I want to hear your thoughts. What advice took out from you the most, and what you will actually retain and use for the future. I want to hear what perspective shifts you have, what mindset shifts you had, and what things you'll start to implement from now on in your trading. If you want to see how journaling is done, check out the first link below. It's going to be going through a behind the scenes of what it takes to actually journal and what it looks like in the real. The links to reach out to Ali will be also linked below. You can check it out. No pressure here, but is breakdown of different trading levels and what it takes to succeed is actually pretty amazing. So you can check this out. And I'll catch you back here next week for the next interview with a different trader and another story on the Desire to Trade podcast. Ciao.